Quickly move on and now focus on some more earnings. We have Krishna Institute of Medical Sciences on the radar. The company's Q4 margin contracted while occupancy declined, although they registered a good growth in average revenue per occupied bed. B. Bhaskara Rao, Chairman and Managing Director, Krishna Institute of Medical Sciences, is with us now. Thank you very much for joining in. Occupancy for the hospital this quarter declined both year-on-year and quarter-on-quarter. Why is that?
See, the occupancy, the decline is due to what we have done in Sunshine. We are shifting the old premises to the new premises. During that time has come and it has come back now in the last 2-3 months. So that is not a big major junk. And the second important thing, because of the elections of last time of the Telangana elections and as well as the cyclone in Andhra has been affected very largely. That is the reason the occupancy has come down.
Well, Mr. Rao, the average revenue per occupied bed saw good growth of around 11.5% on a quarter-to-quarter basis, 12% on a year-on-year basis. What led to this double-digit growth?
So the reason is that the ALOS, average length of stay, was 4.11 has come down to 4.01. And also the payer mix. We have reduced the state government insurance like 1%. That has increased the corporates and as well as the cash and insurance business. So the payer mix and as well as the clinical mix and also the ALOS. These three factors has increased the ARPOBs and the average revenue per operating bed.
Right. Mr. Rao, what are you guiding for FY25 on occupancy and average revenue per occupied bed?
The ARPOBs will still, there is a growth will be there in both in ARPOBs and also we are trying to implement in the ALOS as well. And also we are planning to change the case mix and as well as the payer mix. So definitely there will be whatever is the growth we have seen in the last ARPOBs and as well as operating bed that continue to grow in the next year also, coming year.
Okay, sir, margins came off over last year. Can you just tell us the breakup in EBITDA in the new hospitals and the older ones as well? And what's your guidance on margins for FY25?
See, mostly the newer hospitals growth will be on a single digit. Now this year is actually in Q4 of coming this year. We are going to open up 2-3 hospitals that may able to drag down the EBITDA when compared to the total. But the existing hospitals growth will be single digit.
All right, Mr. Rao, what was the surgical revenue as a percentage of your total sales mix? Have you seen an increase in high-end surgery work in your hospital?
Yeah, surgical business has increased when compared to the previous quarters and year on year, about a few percentage. In more and more, we are going to add, and we are also adding the new therapies, which is a non-surgical and as well as non-medical. There will be more of a interventional radiology and other procedures that will able to help the growth.
Mr. Rao, what is your sense on the possibility of this proposal, right? Standardization of procedure rates in hospitals. Where is that conversation at? Or do you think, it'll only happen once elections, etc. are over? Go on.
No, basically that last time also I mentioned it is very impossible to uniform rates and sensitization because every patient is different. Even though they come with the same symptoms and signs, but the underlying causes will be different. So we need to be able to treat according to that. It is a complexity of each patient is different. So we cannot able to make it a uniformity. And if it happens, as we have seen in the past, in the last quarter, most of the private equity people who want to invest in healthcare were showing a good investments in the last 1 year. They will not able to come back and try to invest. and the industry itself is going to be in trouble, and as well as the quality care will come down. So I don't think that will be an implementable solution. But only thing is they can able to come up to improve the right now the pricing of central government schemes and state government schemes. If they can able to scientifically, if they can able to do the tariff, that also help the organizations to grow much better than what we are today.
Sir, speaking of how much governments are paying, I mean, let's come to the the billing mix as well between different payers. So, what is that current mix between the billing that you do with insurance companies, outright cash payments, and then, of course, all the government schemes and the government component in your revenue mix? And what's expected for the current year?
The insurance and cash is around 80%. The corporates and the Arogyasri scheme is around nearly 20%. Where the Arogyasri scheme, which is a state government run scheme, has come down to 1%. The corporates has gone up 1%. And also the revision rates of insurance has been started. That's why the ARPOBs has increased. Usually it will be once in 2 years we will review the insurance rates. It's supposed to happen last year. Usually it will take a long time to renegotiate with them. That has been materialized in this quarter.
All right, Mr. Rao, we leave it there. Great conversation as always. Thank you very much, and hope to speak with you soon again. But that is the result from KIMS and the outlook that the management has chosen to put forward. Market is